Welcome back to our market coverage. Let's dive straight into today's numbers. The Nasdaq closed at 26,674, the S&P 500 at 7,521, and the Dow at 50,644. The VIX, often called the fear gauge, dropped 3.38% to 15.74. That tells us overall market anxiety is relatively low. But here is where it gets interesting. Gold surged 2.74% to $4,526 an ounce. That move goes against the VIX decline. It suggests some investors are still hedging their bets, buying gold even as fear subsides. Now let's look inside the asset classes. Tech stocks did well. The QQQ gained 1.07%. China's Chi-Next index jumped 1.96%. That is a strong performance. But Bitcoin fell 1.51%. And crude oil took a big hit, dropping 3.64% to $88.75 a barrel. This tells us money is not flowing indiscriminately into all risky assets. There is clear rotation and selection happening. Capital is choosing winners and avoiding losers. So what are the main themes today? We see two clear ones. First, buying AI-driven tech stocks. Nvidia gained 1.19%. The QQQ is also trending higher. And the 10-year Treasury yield fell to 4.45%. That is a big tailwind for long-duration assets like growth stocks. Second, strategic allocation to gold. Gold's move here is not just about fear. It looks more like a hedge against long-term dollar credit concerns. Investors are positioning for a weaker dollar environment. On the macro front, we have several positives. The dollar index broke below 99, closing at 98.99. That lowers the cost of dollar liquidity globally. It is a direct benefit for non-dollar assets and dollar-denominated risk assets. Also, the drop in oil prices eases short-term inflation worries. That gives risk assets some breathing room. But we must also flag the risks. First, if the VIX breaks back above 17, that would signal a return of fear. Our current view of a modestly bullish market would then be invalid. Second, if the dollar index reclaims 99.5, the current liquidity easing narrative would reverse. That would pressure emerging markets and tech stocks. Our overall assessment today is a cautiously bullish market with structural opportunities. We put the probability at about 65%. The strategy is to hold positions but manage risk. The entry condition is the S&P 500 staying above 750 with the VIX below 16. If the 10-year yield breaks below 4.4%, or if AI leaders show strong volume on the upside, we can add to positions. But if the VIX spikes above 16.5, or the dollar index rises above 99.3, we should reduce exposure. Our stop loss is if the S&P 500 closes below 748. Let me give you 5 verifiable predictions for today. 1. The Nasdaq 100 ETF will close above $735.60. 2. China's Chi-Next index will outperform the Shanghai 50 by at least 1 percentage point today. 3. Bitcoin will continue to underperform the Nasdaq 100 on a daily return basis. 4. Gold will close above $4,500, and crude oil will close below $90. 5. The VIX will close below 16.5. Our probability distribution for today is 45% for an up day, 40% for a sideways day, and only 15% for a down day. The bottom line is this. Opportunities exist, but they are selective. Follow the money. It is flowing into AI, tech and gold. Stay disciplined, watch the key levels, and manage your risk. That is your market update for today.